Hi there, welcome to Kneppy Invest and welcome to December 10, 2024. The market has closed for the day. In fact, it closed about 20 minutes ago. And overall, today can be described as, well, it depends on what your portfolio looks like. If you're heavily invested in mining companies, you probably had a pretty good day. Results up 3.12%. But if you're heavily invested into tech companies, you've had a pretty shocking day, more than likely, because the all tech is down at 3.55%. I'm not sure what has caused this bit of panic in the tech sector. I did hear someone say it's because NVIDIA went down 2% overnight. Really? Really? Because NVIDIA dropped 2%, you're panicking? So I'm sure there's other reasons out there, but pretty good day for mining, pretty bad day for tech, but who knows? Maybe tomorrow can be the complete opposite. Overall, slightly down the rest of the market. Small caps down 0.64 and the ASX 200 down 0.36%. Okay, so what am I going to be discussing in today's video? Go through the best and worst performing sectors, indices, and also companies. I'll probably go through the top gainers and top losers fairly quickly. I did have a choice to make when it comes to the top stock of the day, and it was between two companies, Korvest. They do galvanizers, pipe supports, cables, that sort of thing. A small company, share price is in an uptrend, has been an uptrend for a fair while, and they did release an interesting announcement. And the other company that had the potential of becoming the top stock of the day was Develop Global. So I thought, whose ever share price had increased the most would be the top stock of the day, and that means Develop Global is that. Share price up about 11.3%. Korvest share price up about 7%. But I will discuss Korvest in this particular video, not as much as I discussed Develop Global in the standalone video, which I've already recorded. Okay, and the other few companies in the top 5 stocks, I did have a choice. So I did leave out a few companies, which I'll touch upon during this video. And then I do have at least 2 comments I want to also have a look at. A really interesting comment in regards to Black Cat Syndicate and why the share price isn't increasing. And I thought share price must have decreased recently, and I just haven't seen the decrease. Anyway, so interesting comment there. Okay, so let's get to the ASX. Oh, by the way, one of the companies in the top 5 stocks is not ASX listed, but it's one of the biggest companies in the world. And this company released their results after market had closed on Wall Street. Anyway, that's coming in number 5. Anyway, let's have a look at the ASX today. We already know, pretty bad day for tech, a pretty good day for mining. So let's have a look at the different sectors. Materials up 3.04%. Funny enough, I did go through the best performing companies today by market. It's just full of mining companies. Mining company after mining company after mining company after mining company. When I went through the top losers, tech company after tech company after tech company, it was it was an obvious theme when you look at the top gainers and the top losers. You can see IT down 4.04%. In fact, let's have a look at the top losers today. The worst performing companies on the ASX, and I'm pretty sure there is a list here. Yes, we'll go through this by market cap. Look at this. What a horrendous day. WiseTech down 4.4%. In fact, the best performing company here was SiteMinder, only down 2.89%. Life360 down again, 5.2. I saw some reasoning why Life360 has been down 2 days in a row. It's because of a bit of confusion in regards to whether it's going to be included in an index. Is that it? Really? Is that why the share price is down? Because of some confusion about an index inclusion? What ridiculousness is that? Okay, Nuix, yeah, so they're all down except Iris. Iris actually up. Interesting. Gentrack, not down as much. Just see a sea of red. Sea of red when it comes to tech companies. Okay, so we don't really have to look anymore at that. Financials had a bad day as well. So looks like the big banks must have had another negative day. Really don't have to explore that any further. And if we have a look at the indices, yeah, resources, gold, really good day. So when we look at the ASX 20 down at 0.12%, and one of the reasons why that isn't down by a lot, even though the banks probably are down, is because it is, I wouldn't say full of mining companies, but there are a lot of mining and energy companies in the ASX 20. So I would say maybe 8 up, 12 down. Maybe 7 up, 13 down. Yeah, 8 up, 12 down. And if we have a look at the best performing companies within this, yeah, Fortescue, Rio Tinto, BHP, mind you, stimulus, China stimulus is back in vogue. That's why those companies are up. So if we go to trading economics, where is it? China inflation rate below estimates. That's not it. In fact, it's not here at all. I think I have to refresh it. There we go. China export growth slows sharply, but China stocks surge on stimulus plans. So you might be saying these aren't Chinese stocks, but it's iron ore, and we know what Chinese or China is dependent on when it comes to Australia. It's our iron ore. Funny enough, iron ore wasn't up all that much, if I remember correctly. I could be wrong. Oh, it was up a little bit. Yeah, it was up a fair bit. Yeah. Okay, so pretty good day for iron ore companies. Woodside's up a pretty nice amount. Telstra, there was an upgrade for Telstra by some analysis. So that's probably why the share price is up there. And if we have a look at the worst performing companies, yeah, Medicus down 8.96%, WiseTech, REA Group. So a lot of tech companies there. I would even say Medicus is sort of quasi-tech. And then we have the banks, NAB down 2.81%, Westpac, Macquarie, ANZ, all down fairly big. But however, the most overvalued company in the history of well, that's probably being exaggerating just a bit, but the most overvalued bank in history, Commonwealth Bank, was not down all that much, only 1.1%. Anyway, okay, so let's turn our attention to the top gainers and the top losers. So we already know mining's had a pretty good day. Nothing much here. I did go through this just before I started recording, and there wasn't much here. I won't go through MTM critical metals. That's been bouncing around like a yo-yo. But there wasn't much here, to be honest with you. And Rideout Resources, I talked about that company yesterday. They have completed their consolidation. The reason I know that is because I saw their announcement. I went, oh, I know this company. There it is, completion of consolidation. So we won't see RIEDA much longer. There's ACDC Metals. We also have Pantera Metals, I think. No, that's Pantoro. Metallica Metals. I think there should be more mining companies named after heavy metal bands. Yeah, why not? Maybe, what else is there? Slayer. Slayer Metals. Oh, that'd be awesome. I'd buy that just because of the name. Slayer Metals. Okay. And now let's have a look. The top gainers by market, and you'll see what I mean. They're just mining companies. Fortescue, Mineral Resources, Pilbara, Iluka, Vulcan Energy, Developed Global, there we are, Firefly Metals, or Brainchip. There's the one exception, Brainchip. They did release an announcement today that I will talk about. Latin Resources, Sayona, Aurelia, yeah, so just mining company after mining company here. Bizloy still another pretty good day. Okay, so let's have a look at the top losers. And again, nothing shocking here. Visioneering Technologies, down 57.8%. Now, we have seen over the last few months, quite a few companies decide they don't want to be on the ASX anymore because the market is not valuing the company rightly. And the next company to do this is Visioneering Technologies. I've had a look at this company in the past, and I've moved on fairly quickly. I didn't see much to like. Now, what they're doing seems like it's a good thing, increasing the seeing capacity of people, I think children even. Anyway, so Visioneering Technologies announces voluntary delisting. Why do you think? What's the number reason for delisting? Valuation. Oh, the market just doesn't appreciate us at all. In fact, here it is. Reasons for seeking removal from official list. Company valuation. Since the company's IPO, share price has dropped a lot, by the way. In March 2017, the board has observed ongoing fluctuations in the quoted price. Now, share price just keeps on dropping, and noted that the value attributed to a CDI has been largely independent of news flow. Yeah, share price keeps on dropping because you're not profitable. You're not generating cash flow. That's why. The market wants to see profitability and cash flow, or they want to see at least a path to profitability and cash flow. And I don't think the market's seeing that. So even when the positive news has been released, there hasn't been much positive news. This has caused the board to question whether the market is fairly valuing the company. Undervaluation means that the placement of significant equity to investors at current market prices may be more dilutive. Yes, no duh. That's absolutely right. The board believes that delisting would allow a more objective and independent appraisal of valuation take place. Well, here we go. this is the appraisal of the valuation. It doesn't belong where it was before. And this research has been done on this, that non-publicly listed companies tend to have a bit of a discount to them. Or the other way to say it is publicly traded companies have a premium. So when a company decides to delist, not only are they going to be trading at a discount, people don't want to own shares in a company that's not traded because they want to have the ability to get out easily. So that's why the share price is down for Visioneering Technologies. And we'll have a look at the chart. So this company has done a consolidation, and that's why the chart, in fact, we'll have a look at the weekly chart. That's why the share price looks like it's dropped from $55 back in 2000, just after they listed, to like 13 cents now. Is it 13 cents? 5.7 cents, sorry. That must have been after or before. Yeah, that was before 13 cents, before they released this. Now, yeah, so if you bought at the high of this company, you have nothing left. You virtually have nothing left. Share price has decreased, what's that, 99.9%. And the main reason behind that is because the company is not profitable. I've looked at this company on occasion and I just don't see that path. Now, they do sell products and they do get cash flow, but they're still a little bit away from being profitable, being or generating cash flow in their business. So this is the most recent Appendix 4C. And receipts customers, 2.3 million US dollars, and operating cash flow negative 553. Now, I think if they had a plan, if they actually gave a plan, we expect to be profitable, generating cash flow within the next 3 or 6 months, I think the market might be a little bit more forgiving. Maybe they've done that and maybe the market just went, no, we don't think you're going to achieve it. Anyway, so that's Visioneering Technology, whatever it's called. And they decided that they'd rather the share price to be much lower. Anyway, so that's why the share price is down a lot today. That's why it's the top loser, is because they want to delist. Radiopharm Theranostics, I talked about this company yesterday because Theranostics down 19.5. Silver Mines down 19%. I'm pretty sure they did a couple raising. So you can see mining companies in this list, but most of these mining companies are exploring mining companies. So sometimes when there's a bit of enthusiasm within the mining sector, it doesn't really translate to some of these smaller companies. Anything else of interest here? No. But if we turn our attention to the top losers by market cap, again, it's just tech, Medicus, Tuas, or Perpetual's not a tech company. Perpetual down 8.4%. They did release something today. So apparently there was a takeover bid for this company, can't remember that, with KKR. A lot of this went over my head. Looks like it's a lot of law, taxation law or something. And something to do with taxation offers, income tax assessments, I don't know, of Act of 1936. But I think this was the most important bit, even though I'm not exactly sure what it means. This would mean that the previously advised range in respect of taxes and duties announced on 29th of August of between 106 and 227 million is now estimated to be between 493 and 529 million. And the estimated cash proceeds to shareholders for the transaction, I do understand this a little bit. Estimated cash proceeds to shareholders for the transaction would reduce from 838 to 982 per share, as previously communicated, down to 574 to 642 per share. So I do understand that that's a big decrease in cash proceeds to shareholders, a fairly big decrease. They do mention they're extremely disappointed and they disagree with the commissioner's views, even though I have no idea what they're talking about at all, as I said, over my head. But at least I know the impacts to shareholders this would have. So that's why the share price is down 8.4%. And my question is why? Why would you ever be owning this company? Not a high-quality company. Even the trend looks horrendous. This is the weekly chart, by the way, and it's an ugly trend. It's been an ugly trend for a while. In fact, it's been an ugly trend since about 2018. It's been a downtrend since then, after a period of time when the share price was in an uptrend. If you do have a look at the daily chart, you'll notice the share price did increase. I think that was based off the takeover somewhere here. I forget where it was. And now the share price is down. Anyway, so that's Perpetual. That's why that share price of this company is down. We have a crypto here, crypto ETF down a fair bit. Auswise Bank. Wonder why that's down. It's going under. They're undergoing a takeover. I know banks are weak, but that's a fairly big drop. Nothing in the announcements. That's interesting. EcoIQ, not shocked there. Hazer, yeah. So quite a few smaller tech companies in here as well. Now, yesterday I mentioned a company called NVQ. That's not the company's ticker goes in it. Noviqtech. Share price was up a fair bit, 61.2% on no news flow. And I thought they would receive a price query from the ASX. I thought it'd be called price and volume query. They responded to it. So I actually do like looking at these responses to price and volume queries because sometimes you can get good information. Sometimes not. Sometimes they're fairly boring. But sometimes you can get good information because typically the company will answer no to the first question. Second question is not applicable. And then the third question, they can use a bit of creativeness and try to explain why the share price is up. And you can get some good insights out of question 3 if they answer it without a no. Sometimes they just answer it no. Okay, so they've answered this. The recent trading of this company's securities may be attributed to recent announcements of the company. On December 2nd, 2024, the company announced that it had strengthened its strategic partnership, blah, blah, blah. And then they announced something else on the 4th of December. I can guarantee you that could have started the excitement in this company, but more than likely it's just day traders getting excited about this company, that sort of thing. Because if you have a look at the chart, yeah, the share price really took off around the 15th of November, so even before these announcements. And share price didn't do much for about a month after that, but this was a really good signal. 2 really big days up in a row and no significant selling. Share price went sideways or even up a little bit, and then a really good day yesterday. So not massive volume coming in. So that's maybe the reason why this was not a price and volume query. But that's the sort of announcement I do like to read. And again, I want to do some research on this company because I have no idea what they do. So that's Noviqtech. Now let's get back to top losers. I think I finished. Yeah, I think I finished. So let's have a look at the top 5 stocks of the day. And we'll start off with, Oracle. Yes. So Oracle, in fact, let's do this. Oracle. Actually, no, we don't have to do that. I'll go to the earnings calendar. So a lot of times I will look at this earnings calendar, NASDAQ. It's not only NASDAQ listed companies, it's all New York Stock Exchange listed companies. So we're now on the 10th of December. So AutoZone is releasing their results. Fergus Enterprises, never heard of them. GameStop is releasing their results. So those who are holding GameStop might want to may want to look at their results tomorrow morning, our time. And a company called Dave & Buster's Entertainment. Anyway, so yesterday we had Oracle, BHP release their results, MongoDB, Casey's General. But the main thing here is Oracle. And this company has a market cap of $500 billion, not million, $billion. So if it was on the ASX, it would be by far the biggest company. It would dwarf CBA. In fact, CBA, which is the biggest company, would it dwarf it by double? Probably. I'd say it's probably double. Easily double the next biggest company on the ASX if it was listed. Anyway, so Oracle did release their results. So what I do if I see a company release their results, I'll just go into it, and you can actually open up the announcement here in the on their page, so you can see how they performed. The numbers look pretty good. Everything's increasing, but it's not the numbers. It's how the results compare to expectations and if the company released any sort of forward guidance. Okay, so that's the most important thing. Now, I knew almost straight away that something was wrong because if you have a look at the after hours trading, share price was down about 7%, whereas it's down 8.42% now. So something went wrong. So I just had to Google it, and where is it? Here. Okay, so here it is. I'll just have to zoom in a little bit. Oracle shares slide on earnings and revenue miss, disappointing forecast. So we had 2 things. They fell short of their forecasts, expectations, and their forecast was a little bit disappointing. I'll just touch upon their miss, their revenue and earnings miss. And you can see how sometimes the miss doesn't have to be too much. Okay, so share price has increased 80% in the past year. And I should also mention I'm trading Oracle right now. Share price is an uptrend, so I might want to take profits now. Anyway, so here is how Oracle did compare to LSEG consensus. I'm not sure what LSEG means. We could Google that. Let's learn something. London Stock Exchange, I don't think it's that. London Stock Exchange Group. Is it really that? Anyway, let's move on. Here is how Oracle compared to consensus. That's what we'll say. Earnings per share, $1.47 compared to $1.48 expected. Revenue, $14.06 billion compared to $14.1 billion. And second quarter sales grew 9% year over year. Income increased 26%. So the company is actually growing. Oracle's biggest growth engine has been cloud infrastructure, where it is competing with Amazon, Microsoft, and Google. By the way, for those who didn't know, Oracle signed an agreement with Meta, etc., etc. Oracle founder Larry Ellison. Some of you might know that name. Anyway, and they've also got, in September, they raised their revenue guidance for 2026 to $66 billion, which was $1.5 billion more than what analysts were projected. Okay, so let's have a look at the chart for Oracle. So, by the way, I am trading this company. And one of the reasons why is the share price was in a beautiful uptrend. There's me buying. And yeah, I bought this on a breakout. I've done this now a few times with American companies. Just bought on a breakout. They released results, must have been 12th of March. And you can see the share price actually dove back to the moving averages, and they must have released really good results back in June and then also September. So it looks like these results, first time the company has disappointed the market this year, or maybe for a while. So this is the reason why I might take my profits in Oracle. By the way, if you have a look at the weekly chart, I have a feeling this company was, no, it wasn't this company, it was another company. So look at that chart. Look at that massive dive back in the tech bubble burst. Share price of this company went from $45 down to $8. Seems like nothing compared to what's happening now. Anyway, so that's Oracle coming in number 5. And the reason I included Oracle, because I didn't think I'll have enough to choose from today. I had plenty of enough. But anyway, coming in number 4, we have 2 companies. We have Capital Health, share price up 2.7%. And we have Internal Diagnostics, or Integral Diagnostics, up 1.03%. The reason I've included these 2 companies is because they will become one, because their merger has been approved by the ACCC. And that's probably one of the reasons why the share price is up for both companies. Court approval scheme. ACCC provides informal merger clearance, merger update. So it looks like this particular merger of these 2 companies is going through. And this has been really good process for shareholders of both of these companies. And what do I mean by that? Let's have a look at the chart for both Capital Health, and I keep on calling it internal, but it's integral. So CAG. So yeah, I'm pretty sure they announced the takeover back in June. I could be wrong with that. 17th of June. I'm going to just confirm that. 17th of June. In fact, I can do it through Integral. 17th of June. Yep. That's the day where they announced this proposed merger, and that was sort of like a breakout for Capital Health. I've actually owned this company well in the past. If you have a look at the weekly chart, you'll see it's not really the chart of a high-quality company. Yeah, I must have owned this company back in like 2012, 2014, because during the share price went on a really nice tear, and then I sold for some reason. I can't remember where, and then it just collapsed. Not sure what happened. I can't remember, but yeah, not the chart of a high-quality company. But anyway, let's go back to the daily chart. The market has liked this proposed merger, and share price has increased a fair bit. And I am trading IDX, which is Integral Diagnostics. Actually, I'm trading this one. And looks like I bought on the merger, just after the merger. Share price, the chart's probably not as good as Capital Health, but I'm okay with that. And the chart still looks pretty good. For Integral. So that's 2 companies coming in number 4, Capital Health and Integral. So we're going to have one bigger company now moving forward. All right, so let's have a look at number 3, Brainchip. Okay, so I am willing to trade this one. I will trade this one. I've traded this in the past. I don't think this is the sort of company you should own, particularly if the share price increases or the valuation increases a lot. Now, the current market cap of this company is still pretty high. I would say 250 million. I could be off a little bit. Oh, way off. 483. I thought it was much lower than that. the market cap of this company is still 483 million, which may sound absurd because I wouldn't say I got excited about this announcement, but the market did. Share price up 11.4%. US 1.8 million contract with Air Force Research Laboratory. The reason I got excited about that is because this company has provided nothing like this in the past. If you go back 1 year, I don't remember this company releasing any sort of contracts. Yeah, all I see is Appendix 4Cs, equity raisings, no announcements of any sort of contracts, a new Australian patent granted. Who cares about that sort of thing? Capital call notice. So no contracts, no contract news at all. And that's why I found this fascinating. This is the first this type of announcement this company has released. So maybe their technology is gaining some traction. I really wish them well, and the technology sounds fascinating, even though it goes over my head most of the time. So, for instance, Brainchip, the world's first commercial producer of neuromorphic artificial intelligence IP, announced it has been awarded a contract from Air Force Research Laboratory on neuromorphic radar signaling processing. I do understand the word radar, even signaling processing, but yeah, that does sound interesting, but potentially this is validating this company's technology, just potentially. So it's really interesting that this announcement has been, or this contract has been awarded, because it could be the first step in the right direction for Brainchip, just possibly at this point. So let's have a look at the chart. Is this a time to get excited for this company? And I'd say not quite there yet. Not quite there. I do think the bottom has been reached. I think we could say that with almost certainty because the share price has bounced off about 15 cents quite a few times in the past year and a bit. So 15 cents seems like the floor, which means I think now the share price is consolidating. We saw a lot of interest in this company back in February. That interest died away. In fact, the share price went all the way back down to 15 cents. So I definitely think we have found a floor. But if the company keeps on releasing these sort of announcements, maybe there's room to grow. But again, the market cap of this company is still quite high. I'm still shocked it's almost 500 million. Coming in number 2, we have Korvest. Share price up 7.7%. Trading update, my favorite type of announcement. I really wish this was a stock of the day because it highlights why trading updates are my favorite type of announcement. Well, it's not really a trading update. It's more like profit upgrade or profit downgrade are my favorite types of announcements. Anyway, so I am a shareholder of Korvest. Share price is in long-term uptrend, and there are a few things I don't like about this company, a few things I like. I won't talk about those right now because this trading update was intriguing to me to read. So it starts off really good. Following advice from major project customers in relation to delivery schedules, Korvest is expected to deliver a significant increase in the value of project work during the second half of financial year 25. This, together with our usual pipeline of project and day-to-day work, means that Korvest is now entering the second half of the financial year with a record order book. So that does sound pretty good. But they also then mention, due to the uncertainty of the precise timing of deliveries, it is not possible this time to quantify by how much the financial year 25 profit is expected to exceed that of financial year 24. The company has previously noted that its first half financial year 25 performance was expected to have similar revenue compared to the first half financial year 24, albeit margins were expected to be lower due to project phasing and competitive pressures in the day-to-day market impacting first half net profit. The guidance remains unchanged. So it sounds really positive, but guidance remains unchanged. So not really a profit upgrade that I really crow about. So I do think this is a positive update from Korvest, but this was very close to being a rip-snorting day for Korvest. If they actually did increase their guidance, I think the share price would be up way more than 7.7%. Okay, let's turn attention to the chart for Korvest. In fact, let's start with the weekly chart. You'll be able to see how this share price of this company has been a long-term uptrend. So I should have bought some shares in this company back in 2019. To be honest, at about $3. So share price has tripled since then. And yeah, today has been a pretty good day. I want to see the share price get above about $11. You can see the share price went a really good upswing back in July. And that's when they mentioned, I think around here somewhere, they mentioned they're getting into data centers, or data centers might be beneficial for this company in the future. I forget exactly what they said. So there was a bit of an uplift in share price because of that. And I think that then sort of died away. And that's why the share price has pulled back. But maybe this news will lead to the next upswing in Korvest share price. Okay, so yeah. So the stock of the day is Developed Global. I have done a standalone video on that. Share price up 11.3%. Completion of $100 million loan facility with can't pronounce it. So watch out for that standalone video, which I will release in the next few hours. Or if you're watching this video, well after I've released this video, it's already out there. And I'll just finish Developed Global just by looking at the chart. Why not? So I am trading this one, by the way. So I took, I suppose, a support level buy, and I was thinking about selling my position in this company the other day because share price had increased by over 10%. And now I am flip-flopping between selling it and just maintaining a holding in this company because I think there is potential the share price of this company can go significantly higher from here. Because if you have a look at the weekly chart, yeah, the share price, I wouldn't be surprised if the share price can get above to all-time highs in the next few months, particularly if commodity prices start improving. So that's what I'm talking about is maybe $4.40, $4.50, $5. So definitely potential for the company or the valuation of this company to double. Okay, now I'm going to end this video with a couple of comments. Yes, let's do it. Actually, I've already talked about Developed Global. Here we go. I was going to talk about this one. Yeah, so really only one comment I want to talk about. KMVC7IY. You mentioned last week that Black Cat Syndicate, I'm pretty sure that's what that is, BC8. Just going to confirm it is Black Cat Syndicate. Yeah, Black Cat Syndicate. Had a great looking chart and most would agree. However, the stock has since slid. My question is, despite a strong looking chart with significantly high number of buyers compared to sellers, why is it that stock price still fails to go up? Okay, so let's just have a look at Black Cat Syndicate. Down a little bit today. That's okay. If you have a look at the summary, I'm not sure what you mean by what do you got? A significantly high number of buyers compared to sellers. Where are you getting that from? How do you know there are more buyers compared to sellers? Maybe there is, maybe there's not. In fact, we know there might be if the share price keeps on increasing. But usually that just means the enthusiasm of the buyers is better than the enthusiasm of the sellers. Doesn't mean there's more buyers, it's just they're more enthusiastic and they're buying on market, not putting bids in. What do you call that? Limit orders in. Anyway, so let's have a look at the chart and we'll talk about why Black Cat Syndicate share price has slid. And that's exactly what I was thinking when I put the TIG code in. And the first thing I looked at or noticed was, if we go have a look at the daily chart, yeah, I don't think this is a slide in the share price. The share price has rallied since the start of November. Share price has gone from 50 cents up to 75 cents. So I'm talking about 50% rise in share price over a short period of time. And we have just seen the share price decrease a little bit from 75 cents to 70 cents over the last few days. That's not a slide in the share price. This is the normal day-to-day noise you'll see when the share price of a company goes up like this. Share prices don't go up in a straight line. We can see that with Black Cat. In fact, since the share price broke out back in May, look how many times the share price has dipped. We've got at least 4 times. You could even say 5 times here. So share price can always slide back significantly. That's the normal thing you'll see. In fact, I wouldn't even call this a pullback. I would say this is just going sideways. It's not really a pullback. Anyway, so I don't sort of agree that the stock has since slid. And I think this is very healthy what it's doing right now. It's going sideways. Share price has run up. It's now going sideways. It's taken a breather. Even if the share price pulled back to, say, 60 cents, that would be healthy. What you don't want to see is the share price falling below the previous low. That's what you don't want to see, and that's at 50 cents. Anyway, so that's all I'm going to talk about when it comes to Black Cat Syndicate. There's nothing wrong with the chart. Yeah, nothing wrong at all. But anyway, thank you, KM, for that. And maybe I'll do one more. Just James Zane, anyone heard anything about this? Solpats launches 122 million Tuas block trade. I did hear that somewhere. Where did I hear that? Where did I hear that? Maybe it was Capital Brief. I reckon it was Capital Brief. I heard it. There we go. ASX falls as perpetual plummets, while mining stocks surge. We already know that. I forgot to talk about RBA keeps rates on hold. Yes, I forgot to talk about that, but probably not a surprise. No, maybe I didn't. Anyway, so I did hear something about this somewhere. Did they release an announcement? No. I did read this somewhere, but I don't know what or where. Anyway, let's have a look at the chart for Tuas. Share price down 7.5% today, but it's just natural. Share price has been on a run, little bit of a pullback. I'm not concerned about that. Seems like a lot, down 7.5% in one day, but it was up the last 3 trading days a fair bit, maybe 20%. So that doesn't concern me. In fact, even if you look at Medicus chart, down almost 10% today, it doesn't concern me because, well, that run up, massive run up. So you don't ever want to see this sort of candlestick, but it's not the end times for this company. You can see in the past, back in February, share price took a massive dip. Took a bit of a dip back in July and August. So very interesting to see what happens with Medicus over the next few days. I wouldn't be surprised to see the share price keep on going up, by the way. Anyway, so I did hear that somewhere. Nick Patterson, this will be my last question. Sorry, Ben Hutchison. There we go. According to James Garish at Market Matters, 360 is down on confusion over whether company will be including one of the US Russell indexes. Why would people be selling because of that? I don't understand people. Well, that just seems like a stupid reason to be selling. Anyway, Nick Patterson says, do use EMA or SMA for your MA ribbons. Always EMA. I always want to bias towards most recency. So I always use EMA. I'm not sure if there's any research that EMA is better than SMA. So EMA is exponential moving averages. SMA is standard moving averages. I'm pretty sure that's what the definition is. EMA versus SMA. Exponential moving average, simple moving averages. Okay, there we go. And yeah, I just use EMA. I've always used EMA. It just makes more sense to me that you have to sort of bias towards recent times. Anyway, that's all I got for this video because I am getting towards a point where I have to finish the video. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.